guys, we are here with another episode of the Agent Rundown.
Real estate
coffee talk. So we're in the middle of the pandemic of COVID-19, so we are doing a Zoom call, and we have a super special guest with us today. But before we start, I want to introduce myself. I'm Anne Marie.
I'm Christina.
And I'm Angel.
So our very special guest today is Brian McKim, and he is with House America Financial. And thank you, Brian, for being here.
Thank you.
And of course, what's on everyone's mind is COVID-19. But other than that, through this craziness of us being quarantined, we've also heard that interest rates are down. Then we heard that the banks couldn't handle it, so they went up. Then there was this Fed rate of 0%. And then interest rates went up again, then they went down. So my first question to you, Brian, is how are interest rates today?
Thank you so much. Yeah, it's been a wild ride for rates over the last month or so. Around the last week of February and the first week of March, we saw rates that were near an all-time low. We were doing 30-year fixed loans at 3.0, 3.125%, and there was a surge of activity, not only refinance, but also on the purchase side. The buyers that were, looking at homes in December and January, when rates fell, it increased their affordability almost overnight. So it was a tremendous time. And then almost overnight, rates started to go up. So March 6th was about the bottom in terms of rates. And then the following week, we saw rates starting to climb. Now, initially, it's my opinion that rates initially started to climb because lenders and banks were just at capacity. There was so much refinance activity, there was so much volume, there was so many billions of dollars of loans originated nationwide over a 2 to 3 week period that lenders didn't have capacity, so they raised margins. That's what happened initially. And then it evolved into something, quite honestly, a little bit more serious. As COVID spread, as we started to hear about shutdowns in San Francisco and then Los Angeles, the financial markets really went haywire. The stock market, the bond market, banks and lenders. And for those reasons, it really drove up the price quickly on a lot of loan products. Not all loan products, but especially on loan amounts greater than $510,000, those rates went up over a full percent in a matter of days.
Wow.
Global rates went up, and furthermore, non-qualified mortgages like stated income loans, bank statement loans, those pretty much dried up in a matter of days. So buyers that may have even had docs out on a stated income loan, which means typically it's somebody who's self-employed, can't show the income on their tax returns, needs an alternative method of qualifying. They don't show tax returns, they show a profit and loss statement, or they show 12 months of bank statements. Those types of loans became very popular over the last 2 years. And that market, that segment of loans has really dried up. So rates were really low. The media was all over it. Then they went up. Media didn't quite get the word out. People are still thinking rates are great. And for some products, they are still very good. But on many products, we've seen rates go up almost a full percent, a full 1.5% over the last, 3 weeks.
Wow.
That's huge.
Yeah, I was gonna say that's huge. That's a lot of information, and it's really good to know about the different types of loans that are really essentially not available right now with everything that's going on.
I think that most people feel that rates are eventually going to come down, because I think what's happened in the last 3 weeks, it's been a very fear-based reaction by the markets, the stock market, the bond market. I think rates will come down. The million-dollar question is when? Is it going to be in 2 weeks, 1 month, 3 months? I think at some point in the next 90 days, hopefully sooner, we'll see rates start to come back down. And to be honest with you, we're already kind of seeing that. This week has been not a terrible week for rates. The last couple of weeks prior to this week, it's been kind of bananas. But this week, it's been a little bit more steady. So hopefully that continues. I think eventually rates will come down.
So what I hear you saying for all of our clients out there that are watching this, if you're thinking about refinancing, contact us. We'll connect you with Brian and get all your paperwork together. So when the rates do drop, you're ready to go and you can lock in at those low rates.
That's a really good point. Yeah, Anne-Marie, that's perfect because it's so volatile right now, literally from hour to hour or from day to day, rates could change. So just like when you're buying a home, you want to be prepared. You want to have your documents in order. Same thing right now in this environment with the refinance. You want to have your documents in order. You want to be organized as possible so that if and when they come down, you'll be in a good position to lock in a good rate.
Perfect. Angel, do you want to take the next question?
I do. It's a long question. There's a couple different areas. So I wanted to know, have there been any changes to the approval process due to the coronavirus outbreak? And well, let's start with there. Has there been any changes for the approval process?
Generally speaking, the approval process really hasn't changed a whole lot. Lenders, for the most part, are looking at pay stubs, W-2s, tax returns, a credit check. That process really hasn't fundamentally changed. Now, we just spoke about a few minutes ago about some of the non-qualified mortgage products, bank statement loans, stated income loans. For that segment, definitely things have changed. It's not so much the process has changed, just those products have been pulled from the shelves, so to speak, temporarily. They're going to come back. They might come back the same as what they were before. They might come back in a more conservative, bigger down payment version than what they were before. But those products are on hiatus right now. But for the common loan, the full documentation loan, the process hasn't really changed a whole lot. Now, that being said, our world is changing, our economy is changing, jobs are changing, people are, working from home. So for certain customers, additional layers of verification of employment are being required in this environment. For example, if you're a manicurist, if you're a hairdresser, if you're a massage therapist, maybe if you work in entertainment in the studios and your show's on hiatus, those types of situations might require more documentation to verify that income is still coming in. If the show's on hiatus, you might still be getting a paycheck. If not, we're going to want to know when do you plan on going back to work? Hard to say in this environment, I know. We want to know if that person still has a guaranteed position on a show. But there's going to be some borrowers affected. I don't think the majority will be, but some borrowers, let's say a hairdresser who relies on commissions and tips from cutting hair, if the salon is shut down right now, it can be difficult. So it's kind of a case-by-case, moment-by-moment situation. If you're a teacher working from home, still getting a paycheck, I think you're fine. If you work at Nestle and you're working from home now, like I am in my garage, my crazy garage, and you're still getting a paycheck, you should be fine. If you're self-employed and you can provide tax returns, business might be affected right now, but I think, you're still going to be okay. Lenders will still be okay. It's that personal services employee, W-2 employee that I think is going to experience not loan denials, but maybe some extra steps in verifying employment. That being said, I've heard stories of people that unfortunately in this environment have been laid off. And unfortunately, if you're mid-transaction and you're laid off, that's going to jeopardize the transaction because we no longer have that income to help qualify. Yeah. So we might want to look at, can we bring in a co-signer? Can we bring in a co-signer to jump on the loan and save the deal? There might be some alternative ways of finding a solution. But for those that are laid off, I'm sorry, that's terrible. It's probably going to make it much more difficult to get a loan.
Okay. So with all of that being said, I do have a question. So what do you recommend, or what advice do you have? You're saying like get creative, bring in a co-signer if you have to. Everyone else shouldn't really be affected unless there's someone that's been laid off or things like that. Do you have any advice for people that are looking to buy right now? Should they be looking to buy right now, or should they be putting it on hold and preparing for later when it comes to the mortgage process?
It's a great question. And I think in any environment, including this one, I think buyers have to look at their situation, look at their living situation, look at potentially their growing family, see what their needs are, and make decisions based on that. I would say it's not a terrible time to look for a home and get a mortgage and close on a home. Why? Rates are still very good, especially like we mentioned, loan amounts below $510,000, we're seeing rates around 3.625%. 3 months ago or 6 months ago, rates would have been higher on those products. I think it's a bit of perception because rates were lower. They've come up some, and that can be psychologically kind of hard to grasp because it was so much lower maybe a month ago. But all things considered, rates are still good. Rents are still, in many cases, continuing to rise. People have growing families. They need bigger space. So I think it's a great time to buy. One thing to keep in mind, right now, right this very minute, there's probably a little bit, and I don't know exactly how much, but a little bit less competition than there was maybe a month ago or 6 weeks ago. So, for those people that maybe were making offers and getting beat out, this might be a great opportunity to come in with a strong offer, a strong pre-approval, and get their offer accepted. It could be a great opportunity. But I guess my advice right now is the same as it's ever been, which is preparation is key. Talk to a good lender, preferably somebody local. I think now more than ever, going to a Quicken Loans or going to someone you find on bankrate.com could be very, very risky in this environment. Try to find somebody great who's local, get your documents in order, get your pay stubs in order, bank statements, figure out a plan, figure out, what a strategy. And of course, a lender is a part of that discussion, and be well prepared so that when you find a house that you love, you can strike fast and make a good offer.
I love that. So much information. Thank you so much. I just wanted them to hear from the mortgage perspective, because obviously as a real estate agent, they always hear from our perspective. So it's really great for them to hear that from you.
Yep.
Christina, do you want to take away the final question?
Absolutely. Hi, Brian.
Hey.
Okay, so what does the COVID-19 outbreak mean for current homeowners and their mortgage now?
That's a really good question, and I think that's something that's, again, evolving. I've heard some guidance from Fannie Mae and Freddie Mac that have come out and said they are going to allow for a forbearance or deferment of payments for up to 12 months for those affected by COVID. Here's my understanding of it, and here's my advice, I guess. If you're affected, you can be granted this forbearance. Now, from my understanding, it doesn't mean that you need to have COVID, God forbid. You don't necessarily need to be ill. You might be affected by a family member who has it, and you have to stop working to take care of that person. You might be affected, like so many might be, with their jobs, and maybe it is a layoff. Maybe it's reduced hours. I'm doing a loan right now for somebody who's a chef at a really well-known restaurant in Toluca Lake, and he's still working, but temporarily, the restaurant has put into place a 10% cut on pay. Now, I think he'll be fine, but if you're in a situation like that where the pay is cut, you lose your job because of this shutdown, because of this virus, I think you can apply. Now, what do you need to do? That's the $1 million question. And homeowners, if they're in this position, I'm sorry, but if you're in this position, they need to contact their servicer. Who's their servicer? Their servicer is the company that every month they make their mortgage payments to. So you don't call Fannie Mae, you don't call Freddie Mac, you don't call the FHA department in Virginia, Washington, D.C., you call your servicer. It might be Wells Fargo, it might be Sendlar, it might be NationStar, it might be Chase, and you coordinate with them. If a homeowner just stops making payments and doesn't get something in writing via email or a letter, doesn't coordinate this, then they're risking their credit, because if they stop payments, they're going to start getting dinged on their credit. God forbid, they might go into default on their mortgage, which is what we don't want. So if you're in the position, contact your servicer, see what can be worked out. Probably, my understanding what's going to happen is that interest is going to be deferred, and it's going to be put on the back end of that loan. In other words, the balance is going to increase. So at some point, the bank is probably going to collect on their money when the person goes to sell. And the payoff demand is going to reflect that increased balance. Or when they go to refinance down the road, that payoff demand is going to reflect that increased balance. It doesn't go away entirely, but it's a reprieve on those payments for, let's say, 3 months, 6 months, 12 months, whatever. But again, contact the servicer, get something in writing saying that it's okay in this environment, and then, get back on track.
Wonderful. Thank you so much for that information. It's so useful.
Yeah, you're welcome. Thanks, guys.
Awesome. So that's it for today. Brian, thank you again for being our guest on the Real Estate Copy Talk, Agent Rundown.
So
We
much.
appreciate it and all your insight. So those of you watching, contact any one of us and we can get you Brian's information. And if you are, just to kind of recap, if you are a homeowner thinking of refinancing, get your paperwork together now. If you are a home buyer thinking of buying, get your paperwork together now.
If you have any questions, get your questions together for us now so we can adjust.
Exactly.
Everyone has time to learn.
We're always here for you guys, so give us a call anytime.
Yes.
Thanks
So
again.
thanks, everyone.
Thank you guys
Thanks,
so much.
Thank you.
Bye.
Stay safe.
Have a good
Have a
day.
beautiful day.